Hi, my name is George Dagnino. I'm the editor of the Peter Dac Portfolio. In this short video, I'd like to talk about inflation. Now, why is inflation important? Inflation is important because it determines the transition from phase two of the business cycle, which is sort of the mature phase of the business cycle, into phase three, which begins the rollover and eventually very slow growth or contraction in the economy. So why? Because rising inflation, of course, reduces purchasing power, and this means that consumers start spending less. Eventually, business follows consumers and cuts employment and investments, and therefore you have the slowdown. So it's very important to understand the trend of inflation. Now, I have been saying for a while that the odds favor inflation to rise, and for this purpose, I always keep track of this chart here. This chart shows the home prices, and these two lines here are consumer prices and the price index of consumer spending, and these two other lines represent producer prices of finished goods and commodities. So we have a broad range of prices. Now, home prices are important because they lead the inflation down. You have to have lower home prices to have declining inflation. Now, what we have been seeing that since 2023, inflation really here started becoming less negative, so to speak, and then it started rising. And home prices have been slowing down, but now they've been flattening out. And consumer prices and the price index of consumer spending have been going up to 2.6, 2.8%. So inflation in the last period, last 3, 4 months, 5 months, has shown an upward trend. There is no question about it. In fact, even the Fed has recognized these trends because they stopped cutting interest rates. So what is the trend of inflation, which is what really we care? I also showed in the past many times the trend of M2, and I pointed out how M2 was contracting up to 2023, but then the level of decline started going up, and eventually M2 started expanding. And we know very well that inflation is strictly a monetary phenomenon. In other words, if there is more money than goods produced, people buy and prices have to rise because there is not enough supply. Now, what the money supply is saying, strangely enough, has bottomed here in 2023, exactly like consumer prices producer prices, and then have been trending up, and eventually now this trend is now being followed by rise in inflation. Now the property of M2, the money supply, is that leads inflation. In fact, it started sort of moving the trend going up here in 2023, and now we are beginning to see in 2024-25 inflation is going up, which is lead a year and a half. So what is the point? The point is that money supply now is going at almost at 4%. This is really, which is the blue line, by the way. And this is good growth, solid growth, means the economy is growing, but it also implies that inflation will never get inflation around 2% with the money supply growing at 4% and accelerating. Now, what is the direction of the money supply? Well, this is why I show this red line. This is deposits into large commercial banks, meaning that if business or consumers borrow and the amount of money that is borrowed by consumers or business is deposited in the banks relend their money, and so there is a follow through. This is what M2 is about, and this trend in deposit is going up. So the odds are the money supply will continue to grow. Bottom line, inflation has bottomed here, is now slowly growing up. Producer prices are rising, money supply is rising. The odds are for inflation to continue to head higher, not lower, meaning that interest rates, long-term interest rates, are more likely to stay where they are or rise. So in that environment, again, the phase of we are more towards the end of phase two than at the beginning of phase two. So cautious is in order. We have 3 levels of membership for the Peter Dax Business Cycle Academy. The membership number 1 is videos like this one. Membership number 2 is videos and financial updates weekly. And membership number 3 is the Peter Dax portfolio, which is 22 pages twice per month. Videos, we have model portfolios. We have 4 or 5 model portfolios and market updates. Thank you for following this video. I really appreciate it. And of course, if you want to have more information, and dive deeper into current market trends and our investment strategies, please join us at www.patreon.com/Peter Dax. Again, thank you very, very much for reviewing this video, and I hope to see you really, really soon. So long and have a wonderful day.